No, I think people anticipate that inflation has peaked. It's still high, but it's peaked. And we're seeing lots of evidence in terms of the housing market. We're seeing energy kind of stabilize. We're seeing food prices in some cases even come down a little bit, but still high, but stabilizing in terms of growth. And then everything's on jobs. I mean, we're at 3.6% unemployment, which is about 2.1% lower than historical average of 5.7%, and they expect 250,000 jobs to increase. Mm-hmm. I think we're going to see a series of 75 basis point, 50 basis point hikes from here, for the next couple of sessions. But we've got to recognize the markets got hurt badly when inflation was rising. It's still high and will remain high. But I think people believe the worst is behind us with housing and everything else starting to come down. People believe inflation is kind of stabilizing and will start going down, albeit at a relatively modest pace.
Yeah, but going down because the economy is contracting. So
right.
we had shrinkage in the first quarter and second quarter. So if it's a recession or virtually no growth that's lowering inflation, how's that a positive for the markets?
Well, I mean, the markets are anticipating, first of all, we've got the only bright spot in all this, as you pointed out earlier, is the job market. And we're still high. I mean, it's still a hot job market, and we still have a lot of baby boomers. We've got 75 million baby boomers that have started retiring, and they're going to continue to retire. So the job market is going to maintain a fairly low unemployment rate for a while. Again, the economy is contracting a little bit, but so long as, traditionally with recession, we have very high, unemployment. We are seeing increases, ticking up in layoffs, particularly among some of the tech and nascent companies, private companies with losses. So things will be down, but the markets tend to be forward-looking, and I think they're looking forward to fall in terms of the elections and what's going to happen. And I think the market is also anticipating that the worst of inflation is behind us. We're going to have relatively modest to slightly negative growth, but I think people anticipate in the future things will get a little better.
My question for you is, do you think we got that Fed pivot last week and the market has bottomed in this bear market?
Well, I think the market's certainly responding to the Fed and their anticipation whether or not Fed is going to control the inflation. And again, the inflation is what got us in this mess over the last year or so, year and a half, with many of the growth companies getting beat up. We're seeing now a risk-on sentiment for many growth companies. I mean, many of them, like Etsy and Enphase, are up 42 to 45% the last month alone. So we're seeing, we saw Amazon last week going up, 10, 12% in a single day. We're seeing $12 billion or $10 billion returning to the market in terms of flows going into risk capital last week alone. So money is starting to flow in from institutional investors, and I think it's all around the narrative. The inflation, while high, and traditionally among the highest we've had in a very long time, it is peaked, has kind of hit the high. It's starting to come down a little bit, and I really think that's the narrative that we're going to see for the remainder of this year. I think we're going to continue to see the markets generally perform better from here. Prior to July, it was more days down than up. We're still going to see a lot of choppiness, and any given day might be down 1% to 2%. But generally, we're going to see more positive days than negative days, and I think the year will end higher.
I want to get your reaction before we go, Joel, to Minneapolis Federal Reserve President Neel Kashkari speaking about the current state of inflation on CBS's Face the Nation yesterday. Listen.
It's very concerning. We keep getting inflation readings, new data that comes in and as recently as this past week, and we keep getting surprised. It's higher than we expect, and it's not just a few categories. It's spreading out more broadly across the economy, and that's why the Federal Reserve is acting with such urgency to get it under control and bring it back down.
You don't see it his way, obviously.
No. I do see inflation is high. I'm not denying the fact that we've got high inflation and it's going to remain high. The question is whether it's going to continue to get worse. I think we'll see, the next CPI readings that, July was better than June, and I think at that point people are going to, believe that things are starting to get under control. We're seeing more layoffs. Right. And to your point, the economy is shrinking, so it's slowing things down. We're seeing housing prices, drop. So I think a lot of the key areas that got us into this mess with rising energy, rising food, rising wages. I think wages are going to start to not rise as much as they have been, and we're going to see energy more or less plateau in terms of their cost increases, and food prices in some cases have stabilized, and in some cases coming down. So I'm not saying we don't have inflation, we do. I'm not saying we won't continue to have inflation, we will. I'm saying that the worst of inflation, I think, is behind us.
I see a Federal Reserve that cannot probably raise short-term interest rates to even 6% because the United States economy is so overly leveraged in every quarter of it. And so you could see for literally years where cash and bonds never yield a return that beats inflation. And that utterly screws over, once again, people who need safety and need yield. And this has been going on for years, and it will continue for years, where people who are risk averse are forced into incredibly risky assets and investments just trying to beat inflation. And that's, again, it makes me shake my head. Joel, I pontificate. Please come back. It's good to see you always. Thank you so much for your insight. Joel Shulman.
Thanks.